After outlining your investment decision, it is helpful to provide a high-level overview of what the business does in your own words. To do this effectively, discuss what type of products and services this business offers. What type of customers does this business sell to? What channels does this business sell through? What geographies does this business sell in? And what is the revenue model? As an early stage growth investor, evaluating the team is arguably the most important component to underwriting a deal. In later stage private equity, oftentimes investors will replace current management if they believe there is a lack of execution. Early stage investors must gain conviction in the management team and empower them to grow and scale their business. As you evaluate the various members of the team, here's a recommended approach. It is wise to only research the executive management team as part of your analysis. Use LinkedIn and Google as primary platforms to conduct your research. You are searching for the following. Have these founders exited businesses before? If so, were these businesses in a similar industry? How many times have they exited? What was the exit transaction size? Do these founders have previous executive management experience? Have they successfully raised capital before? The overall rating of team is for you to judge. If you believe this executive team is competent and adequate enough to execute. In every deal that you conduct due diligence on, analyzing, assessing, and sizing the market will be required to make an informed investment decision. It is your job to estimate the size of a market. It's not imperative that you arrive at the right answer, but it is crucial that you outline your thought process. Your thinking is what they're assessing. Most of the information won't be given to you, so it's helpful to draw in personal experiences or best judgment to gauge numbers and make assumptions. To approach market sizing, there are three main ways to start. 1, connect to households. 2, use age band theory. 3, use a bottom-up approach. The household approach is useful when you can connect what you're trying to size to a household. Mattresses and cars are a good example because almost every household would have a mattress or a car. So let's say we want to estimate the total number of mattresses in the United States. Using this approach, we start off with the overall population of the country. Let's take the United States for example, 330 million people. Then, we estimate the average number of people per household to be 3. So 330 million divided by 3 equals 110 million households. Using this number, you can then extrapolate other information, such as how many mattresses are sold per household or how many cars each household owns. In our case, we would estimate that there are 2 mattresses on average in a household. Therefore, the total number of mattresses would be 220 million. The second approach is using age bands. We use this approach when we are interested in a particular age segment. Say, babies 1 to 2 years old, or college students 18 to 24 years old, or retired population 60 years and up. The approach allows you to estimate the percentage of the population that falls in the given age band based on life expectancy. Let's say we want to estimate the number of diapers, ages 1 to 2 in the entire United States. Let's start with a population of about 320 million people. Then, let's determine our age band of interest, in this case, ages 1 to 2. If we assume a life expectancy of 80 years, then our age band is 2 divided by 80, which is 2.5%. We will apply this to the total population to get to an estimate of 320 multiplied by 2.5% at approximately 9 million babies ages 1 to 2. If we assume that a baby wears 3 diapers a day, then our estimate would be 27 million diapers that get sold per day, or roughly 10 billion diapers per year. Lastly, in the bottom-up approach, you start with a small number. For example, number of customers, number of units, and build it up. Let's say we want to determine the market size of regular toothbrushes in the United States. We can start by looking at one individual and their consumption. An average person buys a new toothbrush every 4 months. So 3 toothbrushes a year at about $3 each equals $9 a person per year. About 75% of 320 million use disposable toothbrushes regularly, which is 240 million people. So 240 million people times $9 equals $2.2 billion is the total market size of regular toothbrushes bought in a year in the United States. Those are the 3 main approaches to market sizing. Here are some key numbers that would be useful to know to help structure your market sizing answers. But please reference our guide for more information. The other areas of market that you should research are emerging market trends, key market drivers, and the overall market growth rate. The next section of an investment memorandum is competition. Analyzing competition is important because it demonstrates your understanding of the competitive landscape. If you are in a venture, you may run into scenarios where the company you're underwriting is a first mover. And in this case, I would recommend that you think about emerging technologies and how those might introduce new layers of competition. When thinking about competition, it is best to think about this from a Porter's 5 forces framework. The first force is competition in the industry. It's helpful to create what is known as a competitive matrix. This matrix should have competitors on the x-axis and company attributes on the y-axis. Company attributes include location, year established, pricing, products and services offered, customers, amount of capital raised, and valuation. The other forces you will want to include in your analysis and understand is potential for new entrants, the power of suppliers, the power of customers, and the threat of substitute products. Now let's move into finance. If you're applying to a venture capital role, you may not have any company financials or metrics. If you're applying to a growth equity role, you will surely have access to financials and customer information. You should create charts and tables to include a detailed customer analysis of customer net retention, customer churn, customer cohorting, and LTV CAC analysis. You should also create a financial model and analyze the financial trends. Is this business growing revenue year over year? Have they seen a slowdown in revenue? And if so, why? You should create a financial model projection as well. At the end of the day, as an investor, you will have to pay a price for the asset you are looking to acquire. Having a sound rationale for how you would value a business matters. As mentioned above, you now understand the 3 ways to value a business. Apply the above valuation methodology to your case study. Perform a comparable analysis. The best way to approach this comparable company analysis is to read an initiation report by an equity research analyst and understand how the pure play comp was valued when it went public. Process the rationale for the valuation methodology and use that information to guide your analysis. 2, perform a precedent transaction analysis. If you were able to successfully retrieve accurate comparable company information and completed precedent transaction data, then weight both at 50%. And lastly, as investors, one of the most important questions to ask yourself is, how does a business that you are underwriting exit? How do you make money on a deal like this? If it is an acquisition, who buys the business and why do you believe the acquirer has a strategic motivation to purchase the business? Or do you believe that a business like this goes public? And if this business were to go public, what metrics, KPIs, and other financial profile data does this business need to achieve in order to execute? The biggest piece of advice that I have for exit is to look at comparable companies or companies in an adjacent industry that have many similarities and draw parallels. Well, thank you for tuning in. This video will give you a preliminary overview of private equity and how to succeed in the recruiting process. Please read our supplemental guides that go in more detail about each of these sections. Thank you.